Everyone wants to be financially free, but most people think they need to be a multimillionaire in order to achieve it. But for the majority of us, that's just not true. Financial freedom isn't about living a life of luxury, but being able to live the same lifestyle as you do today without having to work for it. In this video, I'll show you how to reach financial freedom without needing millions with a simple 6-step framework. So let's get started. The main reason why people have this misconception of financial freedom is because they have no clue how much money it would actually take to be financially free, and just assume it's a lot, while in reality it all depends on how much you're spending. But the problem is, people don't know how much they're spending because they don't keep track of it. So the first step is to create a budget. You want to know where your money is going, because if you're spending more than your income, you don't really have a money problem, you have a spending problem. If this is the case, you have to start cutting costs. Take a good look at your spending habits, which will allow you to plug the financial leaks that are draining your bank account. You have to decide which expenses aren't really necessary, because the less you spend, the faster you'll be able to achieve financial freedom. Here's how to make a budget. First, look at your average spending over the last 3 to 6 months. This includes everything from your rent or mortgage to your Netflix subscription and daily coffee runs. This will be the benchmark for your budget. Now you have to decide if you want to change some of your spending habits or reduce certain expenses. You want to form a budget where you have as much as possible left over each month to save and invest. You have to decide for yourself how far you want to take that. Ideally, you want to save and invest at least 10 to 15% of your income, but more is always better. Keep track of your spending and adjust your budget accordingly. Remember that your budget is a living document that evolves with your financial situation. So if your rent goes up or down, make sure to change that in your budget. There are lots of apps that help you track your spending habits and manage your budget, like Mint or Good Budget. But I also built a tool myself that helps you create a budget and get control of your finances, but more on that later. Now that you have your budget sorted, it's time to take a step further and assess your overall financial health. That's where the balance sheet comes in, which is a snapshot of your net worth, assets, and liabilities. Think of your balance sheet as a financial compass that guides your wealth building journey. It shows you your net worth, which is your assets minus liabilities. So what you own, like a house or car, versus what you owe, like your credit card debt or student loans. This powerful tool allows you to gain clarity on your financial situation. For example, it might be wise to first pay off your high interest credit card debt before starting investing, as the interest you pay might be higher than the interest you will be making while investing. The next step is pretty simple but necessary before you can start investing, which is creating a cash flow statement, which measures your cash inflows and outflows over a specific period, like a month or a year. Inflows are your income from salaries, side hustles, or interest on your savings account, while outflows represent all your expenses, like rent and groceries. But since we just created a budget, the outflows is the exact same amount. So let's say you make $2,500 a month after taxes, and your budget is $2,100 a month. That means you have a positive cash flow of $400, and that money can be used to save and invest. You will also need this number for the next step, which is calculating your financial independence number. Now comes the interesting part. Like I said, the goal is to become financially independent as quickly as possible. This means to someday live from the income of your invested resources, so you can work for joy and not for necessity. Let me give you a simple example of how to calculate how much you'll need to be financially free. So let's say we have a budget of $2,100 a month. Maybe this is much less or much more than you are spending, but this is just an example. So this means we need 12 times 2100, which is a little over 25,000 a year to live our lifestyle. But how do we get 25,000 a year from investing? Well, the math on this is actually pretty simple. You need an investment portfolio that on average returns at least 25,000 each year. For example, the US stock market as a whole goes up over 9% on average each year. But for the calculation, we'll use a lower number because your portfolio might not just be focused around the US stock market. And especially when you're getting close to your financial freedom number, you might want to start reducing your risk and also invest in other assets that are less volatile, like bonds. So let's say we're expecting our portfolio to go up about 7% per year on average. To figure out how much we need in our portfolio, we do 25,000 divided by 0.07, which is almost 360,000. Again, these are just averages, so you can be more conservative if you want. For example, the FIRE movement, which means financially independence, retire early, uses an average of 4% per year to calculate their financial freedom number. For our own example, this would mean we need 25,000 divided by 0.04, which is 625,000 in our investment portfolio. This would take longer to achieve, but might be a safer choice. The idea here is that you first build up an investment portfolio of 625,000, and when you do, over the year it will ideally grow by at least 4% to 650,000, allowing you to take out 25,000 at the end of the year to pay for next year's expenses, and still leaving you with the initial 625,000 so you don't mess up your returns for the next year. Now, I'm curious to hear in the comments whether that number is lower or higher than you expected. And I'm not saying it's easy to build an investment portfolio of 625,000. It will take years and a lot of investing, but it's probably much less than what most people would think. You don't need millions in the bank or a multi-million investment portfolio. You do if you want a luxurious life. But that's not our goal, at least not for now. Our main goal is to free ourselves from having to work to pay for our expenses. As I said before, I created a free guide and a tool that explains and helps you with all the steps that are mentioned in this video, from budgeting to investing. So you can find a link for that in the description below. Now you know how much you need to be financially free and how much you can invest each month. It's time to make an investment plan. You got $400 to invest each month, but what do we invest it in? Let's start with some basic principles. People who try to trade or time the market lose out versus people who consistently buy and hold long term. That's why we use dollar cost averaging, or DCA, where you invest the same dollar amount each week or month regardless of what the markets are doing. And just like we don't try to time the market, we also don't pick winners, which means investing in individual stocks or assets that will supposedly outperform others. 99% of people will fail at it, so why bother? That's why we invest in everything through diversification. And the goal is to diversify between asset classes like stocks, crypto, bonds, commodities, and also within those asset classes themselves. This is simplified by investment products that will allow you to diversify over multiple assets while only buying one thing, like indexes or ETFs. There are different types of portfolios depending on your risk tolerance. For example, you could decide to only invest in stocks and just buy a US broad market ETF like the S&P 500. But for the purpose of this video, I'll show you an example portfolio that is highly diversified, but can be created with only 5 ETFs that over the last 30 years had an average yearly return of 7.3%. And that is Ray Dalio's all-weather portfolio. And for those who don't know, he is the founder of Bridgewater Associates, which is one of the biggest investment firms in the world. and this portfolio is designed to survive all economic environments. The all-weather portfolio holds 40% US stocks, 30% US bonds, 7.5% gold, and 7.5% commodities. If you're also interested in owning some crypto, you could consider lowering some of the percentages of the other assets and replace that with Bitcoin and or Ethereum, for example. Again, this was just to give you an idea of how a highly diversified portfolio can look like, but you can make it as simple or complex as you want. I've made multiple videos on different types of investment portfolios and how to decide what's right for you, so be sure to check those out. And in the tool that I created, you can also find multiple different investment strategies and portfolio setups. The last step is to actually start investing your money. Like I said, the idea is to find an index or ETF for all the asset classes in your portfolio. What is available to you depends on what the brokers in your area offer. So you just have to Google best broker in your country and compare which is best and has the lowest fees. For the all-weather portfolio, you could use multiple ETFs, but the Vanguard Total Stock Market ETF is a great option to cover the stocks allocation. And in terms of the bonds allocation, the Vanguard Long-Term Treasury Index Fund, or VGLT, covers it together with VGIT, which is the intermediate term version. For commodities, you could go with the United States Commodity Index Fund, or USCI, and for the gold allocation, the SPDR Gold Trust, or GLD, is a good choice. But like I said, any ETF that covers the same assets with low fees is completely fine. And if you also want to allocate part of your portfolio to crypto, Coinbase or Binance are great exchanges. And if you don't have access to either of those in your country, go for something that is locally trusted. When you have your broker and you figured out what you want to buy, the only thing left to do is follow your plan. Some brokers even allow you to automate the whole process of investing. So whenever you get your salary, a part of it is automatically sent to the broker and invested for you. Alright, I hope you now have a better understanding of what it takes to be financially free and that it might be easier to achieve than you thought. If you have any questions, don't hesitate to ask them in the comments. And if you got some value from this video, be sure to like and subscribe because I'll be posting many more videos like these every week. If some of these words or concepts were unfamiliar to you, I'll leave a video right here that explains everything you need to know to feel comfortable investing your money. See you next time.